Okay, so my name is Sheneya. I'm a CPA, born and raised in the Bronx, New York. I have my CPA license in the state of New York, and I'm the founder and CEO of Fuller Financial, which is an accounting firm dedicated to helping creatives, entrepreneurs, small business owners, and affluent professionals with navigating their financial journeys.
That's right. And she's been a blessing to my life, man, over this last year. So let's get to it. It's tax season. All right. Off the rip. The people watching us right now are ready to file taxes. They are ready to go get their tax refund. They're going to jump out there and go do it. What are some things that they need to be putting into place right now? One, to make sure that they maximize on their deductions, but two, they're doing it legally and ethically.
Yes, heavy on legal and ethical. So I want to start by categorizing individuals into two groups.
Okay.
We have those that are earning traditional income, so we call our ordinary income earners.
Okay.
And then we have those that earn income via portfolio or passive income, right? Because all of these dictate what deduction you should be looking for as you are filing your return. If you are an ordinary income earner, in regards to what refund you get, this is all dependent upon how much taxes you pay in through the year and also what deduction and credits that you get. So if you are a W-2 employee, one way that you can maximize your tax position is by having proper withholding. Mm-hmm. So whenever we get hired into a new job, we're filling out a W-4. That W-4 form tells the IRS how much you want to have withhold from your checks. Okay. So the more you put, the less you have withheld. The less you put, the more you have withheld.
What do you recommend?
You want to actually, there's a W-4 calculator that's on the irs.gov website. That's free. Okay. So if you are unsure and you can't get in contact with a CPA, you can use the irs.gov's tool, and it'll let you know how much you should put as a for your withholdings. Okay. Typically, you put one for yourself if you have no dependents. If you have a dependent, you now start adding. So if I have one dependent, now I'm going to put 2. If I have 3 dependents, I'm going to put 4. Okay. If you are married and you are the sole provider, you can put 2 because technically your spouse is considered your dependent. Okay. You want to have less taxes withheld so you can have more income in your pocket so you can take care of your family. Yes. So it all depends on your filing status.
Okay. So what about those people who go in there and put like 15?
Those be the same people that owe. They be like, oh, how come I owe? And I'm like, let me see your W-4. And I'm looking, it's like 10. I'm like, you don't have no kids. You don't take care of your parents. You don't have no dependents. Why'd you put 10? They're like, oh, well, somebody told me that I'll have money in my pockets throughout the year. Right. And again, there's that, the weight of, okay, yes, you can have money in your pockets throughout the year, but come tax season, you may now owe because you did not have an adequate amount of withholding.
So is there a way to where we can narrow it down to where maybe by the end of the year, we get a little return to no return to where we do just break even?
That is the goal. That is every taxpayer's, that should be their optimal goal, because think about overpaying the IRS and getting a big refund is that you're not getting any interest on
Talk to me now.
You're not getting any interest. So you get this big refund, yes, but again, it's money that you could have had in your pockets last year. Yeah. Could have took that same amount, invested it into a mutual fund, and made 10% off of it. Okay. But yet you're waiting for tax season to get back something that has no interest attached to it.
I told y'all. See the people CPA. The people CPA. CPA. All right. So now keep going, because this is really gonna be all you. Like I just want you to just really help the people, teach the people what they need to be doing, because I think right now they want to get the most they can back from taxes. So how do we help people get the most back?
Yes. So in regards to getting the most back, again, that's not the goal. Our goal is to hopefully break even.
Thank you for checking me on that.
Yeah, it's not checking you. It's advising. It's what I'm here for. Right. So this is when the taxpayer wants to take control of their financial life. Okay. So many taxpayers are just paying into the system and they don't know how it works, right? So you want to at least assess your financial position every quarter at a minimum, to where you're looking at how you're earning income. Are you earning income just from your W-2? Are you earning income through a business? Are you earning income through investments? Are you earning income through somebody else's business, right? So you want to assess this, because if these factors now change, you may be triggering additional tax liabilities, because aside from additional income tax on your ordinary income, you may be subject to capital gains tax. You may be subject to, tax on self-employment. You may be subject to taxes for underpayment if you were supposed to pay and you now owe.
Okay.
So you want to make sure that you are on track. So if you're somebody, and I typically tell taxpayers, if you trigger schedules A, B, C, D, or E, you want to go ahead and get a CPA to assist you with your tax filing.
Okay.
Yes.
Okay. So break this down. You said capital gains tax. I think some people may be wondering, okay, what does she mean by capital gains tax? What is that? And how do you know you either have to pay capital gains or you don't have to pay capital gains?
Yep. So a capital gains transaction is triggered when a taxpayer sells an asset for more than its original purchase value.
Okay. So if I bought it for $500,000 and I sold it for $600,000, I have to pay capital gains tax on that $100,000.
Exactly. And now the thing about capital gains tax is depending on how long you held that asset, you may either fall into paying short-term capital gains or long-term capital gains.
Okay.
In the long term, most things are typically a lot more favorable.
Yeah.
In the short term, your capital gains are going to be taxed at your ordinary income tax rate. For this year, thus far, granted, nothing changes with the new tax proposals.
Right.
That ordinary income bracket is 0 to 37%.
37%.
37%. Exactly. So imagine if you made $800,000 in investment income, you're going to pay 37% taxes on that.
That's short term?
That's short term, yes.
So you mean a house that I
Up to
just
37%.
sold, I'm going to be taxed up to 37%.
No. So there's exclusion. So I'll get into that after I talk about the long term.
Okay.
So in the long term, capital gains are either taxed at 0, 15, or 20%.
Zero.
And this is dependent upon your income.
Okay.
So if you earn, let's say, less than $30,000, you can pay $0 in capital gains tax.
For real?
Yes. If you earn anywhere between, let's say, 30 to like $400K, you're paying 15%.
Okay.
And if you earn even more than that, and again, these thresholds may not be completely accurate, it's coming from my head. But if you earn more than that amount, you're now paying 20%. So even at a maximum, you're cutting your tax liability at least by 17% by holding your investment for more than 1 year.
Okay. Is it 1 year? You're the professional. Mm-hmm. I just study money too. I thought it was 2 years. What does a 2 year come into play?
So that's different. So what you're referring to is real estate.
Yeah,
right?
yeah.
Exactly.
Yeah.
Mm-hmm. So remember, capital assets are different because a capital asset can be machinery, it can be equipment, it can be a car, a vehicle, It can be a business. A business is an asset as well.
Okay. So what about this? A lot of people this generation is getting into cryptocurrency, getting there and making some money, and then they're bouncing in like 6 months.
Exactly.
Do they pay capital gains tax on that as well?
Yes, they are supposed to pay.
Why you say supposed to?
The thing about crypto is because it's this new thing still, there's not a lot of regulations as with traditional brokerage accounts.
Okay.
Traditionally, if you invest in the stock market, you're going to get a form 1099-B at the end of the year that shows your interest, your dividends, your capital gains, etc. Thing about a decentralized currency is that the transparency is not there. So yes, you want to be encouraging taxpayers to properly report this income,
right?
So that they, won't be, questioned for tax evasion in the future if they do figure out a way to track this type of income. But you want to go ahead and encourage people to, again, be legal and ethical and report how much they earn.
Legal and ethical.
Yes.
That's what we promote over here.
Yes.
That's why she's my CPA.
The good thing about reporting income, because people are like, well, why would I report it if I don't got to pay tax on it? Well, it depends on if you are playing this game for the short term and the long term.
Okay.
Because in the long term, claiming $600K and gains from being a crypto investor is amazing, right?
Right.
Because you can now leverage your income to get personal lines of credit, business lines of credit. You can get mortgage. You can continue to work on your wealth building journey.
Yeah.
Aside from not reporting income and you look poor on paper, well, guess what? If you're trying to come to me for some type of funding assistance or with a business idea and you look poor on paper, you're not probably going to get through.
Yeah, that's true.
Exactly.
She's still my CPA. I know y'all saying she said lines of credit. Well, when she advises me, she knows I only do cash.
Yes.
She knows that. But you did direct me on how to set up my taxes to set myself up to get my new mortgage.
Exactly.
And that's what I love about it. You know what I'm saying? She's still my.
Yes, we customize. Listen,
Absolutely.
for each
you got to do
client.
it for every client.
Exactly. We customize because we want to make sure, again, it's all about your personal financial journey.
Absolutely.
And our journeys may all look different.
Absolutely.
Mm-hmm.
Cash.
He just got money, y'all. He can cash out on everything.
Listen, God has been good. I'm not gonna lie to you.
Amen.
2021 was a great year for me, and I'm looking forward to seeing what God's gonna do in 2022.